Warning sign number 9 that you've probably outgrown your financial advisor is when they have no strategy when the world changes. I mean, everything isn't always status quo all the time. Things change. Inflation surges, interest rates spike, the markets drop 10, 15, 20+% from time to time. Elections reshape policy, geopolitical conflicts break out. And what does your advisor say? Stay the course. Sometimes that's okay advice, but when that's the only advice they give, no matter what's happening in the world, that becomes a problem. So here's why this matters. We don't live in a vacuum. Markets move, laws change, risks evolve, and opportunities emerge. And high net worth investors need a strategy that actually responds to that reality, to everything that's changing in the world. Because again, there will be risks that emerge, but there's going to be opportunities that emerge as well. And you want to have the ability to be nimble and to take advantage of those opportunities. But the issue is many advisors, they operate in set it and forget it mode. Why? Because it's easy, it's turnkey, and it's profitable. They don't have to buy hundreds of thousands of dollars of political and economic and investment research to try and develop a proactive strategy. They can just continue to come back to you and say, stay the course. You have millions of dollars on the line. You need a plan that's not static. You need one that's dynamic. And we're not advocating that you panic when things happen in the world. We are advocating planning. And the issue with a lot of financial advisors is stay the course is often code for, I don't know what else to tell you, or I don't want to put in the work to adjust anything. When real events happen, subpar advisors sit quietly and they wait it out. That's not strategy, that's inaction in disguise. Let's talk about some of these events that have happened over the course of the last several decades. Let's go back to the end of the 2000s when we had the Great Recession, which was caused by a mortgage and real estate crisis that eventually infected some of the biggest banks in our country. That led to definitely quite a bit of risk, but also opportunities that had to be taken advantage of. Remember the COVID lockdowns of 2020 when the governors around the country told us all to stay in our homes and not go to work unless you were an essential worker. Again, something like that, which likely caused e-commerce to boom a heck of a lot faster than it would have. Yes, it presents risks, but it also presents opportunities. And just recently, markets dropped over 20% in response to a tariff rollout strategy. That presented a very short window of time for people to take advantage of a once-in-a-decade opportunity. When the world changes, you need to be ready to move and act right now. And that's what real advisors do. Responsive advisors, they're reaching out to you proactively during times of volatility or policy change or geopolitical events. They're either contacting you directly or proactively making changes in your portfolio when they identify opportunities that might actually make you more money in the long run. They're identifying tactical moves. It could be tax loss harvesting. They might recommend Roth conversion strategies for some stocks that may be a little beaten up. They may recommend that you rebalance your asset allocation, maybe from 60-40 to 70-30 or vice versa. They're going to evaluate real estate, alternative investments, private deals, private opportunities, other asset classes that could add value to your portfolio. And they're gonna adjust your withdrawal strategy based on inflation, interest rates, and tax rates. They don't react emotionally, but they do act strategically. And both Vanguard and Michael Kitce say there are two other areas that are big sources of advisor value. Asset location, having your money in the right tax wrappers, can be worth up to 75 basis points of annual performance. And distribution strategies, taking money in retirement from the right accounts at the right time, that's worth up to 110 basis points annually. That's real money. So here's a quick gut check. Did your advisor reach out during the most recent bear market? Did they recommend any strategic changes when inflation was over 9%, when interest rates were hiked? Did they recommend any strategies or changes when tariffs were rolled out? Have they reviewed how changing policy affects your estate plan, your tax plan, your legal structures? If the answer is no, they're not paying attention. they're asleep at the wheel and you're the one paying the price. Look, we all get it. The markets move, they go up and down. Taxes change, rates go up, rates go down. Uncertainty is always going to be there. So if your advisor's stuck saying the same thing over and over like a broken record, you've probably outgrown them. At our firm, we don't chase headlines, but we read between the lines, trying to play chess when everyone else is playing checkers. We proactively adjust, we think ahead, and we execute. If you're interested in talking to us, go to tepperzoom.com and schedule a 30-minute Zoom with me, and we can have a quick conversation to see if it might make sense for one of the members of our team to do a confidential wealth strategy audit for you.